Let me ask you a question. Has your credit score ever dropped and you couldn't figure out why? You paid on time, you kept your balances low, you did everything they told you to do, and your score still went down? Well, this is not an accident. And the truth of the matter is most people will never find out why it happened because they're never supposed to. I've been working inside the credit and finance world for over 37 years. I've sat with hundreds of entrepreneurs and individuals who did everything right. Perfect payment history, low balances, clean reports, and they still couldn't get funding. They still couldn't get approvals. They still watched their scores drop. That's not a credit problem. That's a programming problem. Your score is running on a system most people have never been allowed to see. In the next 12 minutes or so, I'm going to show you 3 ways your credit score is being manipulated right now and exactly what to do about each one. Credit moves, business moves, and the identity truth underneath all of it. But before I get to that, there's something about how your score gets calculated that banks have spent a lot of money keeping quiet. And once you see it, you'll never look at the credit card statement the same way. Now, let's get this really clear. First, let's talk about the real problem. Most people are playing a game where they don't even know the rules. The credit scoring system was not designed to help you win. It was designed to predict risk for the lender, not for you. This is an important distinction. So when you hear pay your bills on time and your score will go up, that advice is true, but it's also incomplete because the truth of the matter is paying on time is only 35% of your score. The other 65%, that's where the manipulation happens. I gotta say that again. 65% of your credit score has nothing to do with whether you pay on time. And the system counts on you not knowing that. Because the less you know about how it works, the more profitable you are to them. So today I want to share 3 ways your credit score is being manipulated today, and you probably don't even realize it's happening. But before we do, I want you to do me a favor and like this great video, subscribe to the channel, hit that notification bell so many more people get this great information. Now, move number 1, utilization timing. Here's what most people don't know. Your credit card company reports your balance on your statement closing date, not your due date. These are not the same thing. You got to get this. Let me give you a real picture of what that means. You got a $5,000 limit card. You spend $2,000 on it during the month. Groceries, gas, a business supply run, normal stuff for individuals or business owners. Your due date comes, you pay the whole thing off. You feel real good. You did the right thing. But here's what already happened. On your statement closing date, which was 2 weeks before your due date at least, the bank took a snapshot. And at that moment, your balance showed $2,000 on a $5,000 card. That's 40% utilization reported to the bureaus while you were asleep. FICO 8 and FICO 10T both use that reported number, not what you owe today. And if you're running 40% utilization month after month, your score is suppressed. Not because you're irresponsible, because you don't know when the snapshot gets taken. So pay your balance down to under 10% before the statement closing date, not the due date, the statement date. Call the number on the back of your card and ask them when your statement closes. That one move alone can shift your reported utilization and your score significantly. Same person, same habits, different positioning, and that makes all the difference. This is important, critically important. Move number 2, authorized user positioning. When I say loophole, I don't mean something shady. I mean understanding how the system actually works and using it in a way it was built to be used. When you get added as an authorized user on someone else's account, an account with perfect payment history, low utilization, and good age, that positive data flows directly onto your credit report. Think about it like this. Imagine your credit file is a job application. Right now, it only shows your own work history. But what if you could borrow a cosign signer's track record legally, structurally, and have it show up on your file. That's what authorized user positioning does. Credit scores don't just respond to effort, they respond to data and data patterns. And when you position yourself on the right account, the pattern changes. So you got to get this right. Look for accounts with at least 5.5 years of perfect history, utilization under 7%, and a credit limit of at least $10,000. It could be a family member, a trusted mentor, or it could be a vetted credit seasoning source that has trade lines. When that account reports, it moves your file. Now get this part. This is critical for you. The best time to do this is 45 to 50 days before a significant action, such as applying for a car loan, a mortgage, a credit card. Strategically, maybe you're 15, 20 points away from where you want to be. This is the perfect time to apply 45, 50 days before. Move number 3, the inquiry illusion. Every time you apply for credit, you get a hard inquiry. Most people know that, but here's what they don't tell you. This is important. Multiple inquiries for the same type of credit within a 14-day window are supposed to count as one. It's called rate shopping protection. It was built into the scoring model specifically so you could compare offers without getting penalized. But not all lenders code their inquiries the same way. And if they don't, your score gets hits multiple times for what should have been one shopping event. The real lesson is this: the system is counting on you not knowing or checking these details. I got to say this one again. The less you know about how it works, the more profitable you are for them. When rate shopping for a mortgage, auto loan, or business line, do all of your applications inside the same 14 to 20 day window. And before you apply anywhere, ask the lender directly, how do you code inquiries? If they can't answer that, that tells you something very important. Now, let's do something specifically for a business owner. I need you to listen carefully because what I just told you applies to everyone. But what I'm about to say, this is specifically for you business owners. Business owners have a unique advantage that most people never use. You can separate your personal credit from your business credit completely, legally, structurally. But here's the problem. Most business owners don't. They use their personal social security number for every business application. They personally guarantee every card. They tie their name and their personal credit file to every dollar their business borrows. And they wonder why their personal score keeps dropping even though their business is growing. Let me give you a real story. I worked with a business owner, a very good man, sharp operator, 6-figure business, 780 personal credit score. He was proud of that score. He worked hard to get it. But every time he applied for a business card, he was using his personal social security number. That application, every month, he was doing 2 or 3 of them, trying to get capital to grow. His personal score dropped 45 points. Did you hear that? 45 points for trying to grow his business the way the bank told him to. That's not bad credit management. That's bad financial irresponsibility. That's an entrepreneur who didn't know the system was running him through a process that was never designed for someone with his goals. Business credit is a completely separate ecosystem. When you establish an EIN based on credit profile, when you use vendors that report to Dun & Bradstreet and Experian Business instead of personal bureaus, when you stop personally guaranteeing every single account, you do 2 things at the same time. You protect your personal score and you build a business credit stack that actually scales when you get revenue. Here's your pro move. Start with vendors who report to business bureaus without requiring a personal guarantee. Companies like Uline, Grainger, Quill, even BCC Supplies pay on net 30 terms. Build yourself 3 to 5 of those types of trade lines. Then layer in a business credit card using your EIN only. That's how you build a funding stack the right way, because credit isn't just about borrowing money. It's about positioning yourself for opportunity. And for the business owner that's positioned, everything is all about positioning. If you position, that position is going to make the huge difference for you. But here's what nobody's telling you, and this is all of you, every single one of you. Everything I just taught you, the statement date, the authorized user, the inquiry window, the EIN separation, all of that is real. All of that works. But here is the truth underneath the truth. Your credit score isn't broken. Your operating system is. I've seen entrepreneurs with a 750 score who couldn't get funded because their identity said borrower. And I've seen individuals with a 680 score who walked out of the same bank with $200,000. I've seen entrepreneurs with a 680 get $250,000 because their identity said business entity. What is yours? Those tactics I gave you today, they're real moves. But if you take them and try to apply them inside the identity of someone who is just trying to fix their credit, they will only work halfway, because the system reads more than your score. It reads your pattern. It reads how you show up. It reads whether you operate like someone who understands the rules or someone who is still guessing. Think about it this way. You've got a thermostat in your house. You can walk over and force it to 72 degrees. But if the wiring behind the wall is set to 58, it will pull you right back down. That's what I call the identity thermostat. Very critical. Your credit moves are the dial. Your identity is the wiring. Until you fix the wiring, the number keeps snapping back. The real lesson is this: credit is a system. Business credit is a system. And you, the individual, the entrepreneur, you are the system too. When all three get aligned, money moves differently. Doors open that weren't open before. Not because you got lucky, because you finally stopped trying to win a rigged game and started understanding how the game actually works. So here's your blueprint. 3 moves you can make this week. Step number 1, fix your statement closing date. Call the number on the back of every credit card you own. Ask one simple question: when does my statement close? Write that date down. This is the day the bank takes the balance snapshot that gets reported to the credit bureaus. Everything before that date affects your reported utilization. Pay your balance down under 10% before that date. Not the due date, the statement date. When the snapshot is taken, your utilization is low. Your score reflects that within 1 billing cycle. This is not about being better with money. It's about understanding the camera angle that's aimed at you. Entrepreneurs who know where the camera is position themselves better for the shot, and individuals succeed on a monthly basis because of this as well. Step 2, get positioned on a strong account. Identify a trusted family member or close friend who has a credit card with at least 5.5 years of perfect payment history, utilization under 7%, and a limit of at least $10,000 or more. Ask to be added as an authorized user. That account's data flows into your credit file. The positive age, the low utilization, the clean history, it all shows up as part of your profile. Depending on your current profile, this move alone could add 20 to 50 points within 1 to 2 billing cycles. Results vary, but the direction is always the same. Positioning isn't gaming the system, it's understanding the system that already rewards people who know how to be in the right place. You're just getting in the right place. Step 3, if you're a business owner, separate your credit ecosystems. Stop using your personal social security number for business credit applications. Establish your EIN-based business credit profile if you haven't already. Start with net 30 vendor accounts that report to the business bureaus: Dun & Bradstreet, Experian Business, Equifax Business. Business credit bureaus score independently from personal bureaus. A Paydex score built on net 30s doesn't touch your personal FICO. It protects your personal score while building a parallel funding track. Over 6 to 12 months, you build a business credit profile strong enough to access funding that requires no personal guarantee. That's when the real scaling starts. The moment you stop treating your business credit and your personal credit as the same thing, you start operating like a business entity, not a self-employed borrower. That identity shift is what opens the next level of funding. Success doesn't happen by accident, people. It happens when you understand the system and position yourself the right way inside it. Well, listen, here's what I want you to remember. Your credit score isn't just a number, it's a gate. And the people who understand the mechanism, who know when the snapshot gets taken, who know how to position themselves on the right accounts, who know the difference between personal borrower and a business entity, those are the people who get to walk through the gate on their terms. The system was not built for you to win, but I've been teaching people and entrepreneurs how to use it anyway for 37 years. And the ones who win aren't the ones who work the hardest. They're the ones who finally understand how the game works. Listen, if this gave you something you can use, hit that like button and subscribe. I drop this kind of content every week, the stuff they're not putting in the mainstream feeds. This is important. Now drop a comment and tell me, which one of these 3 moves are you starting with this week? The statement closing date, the authorized user play, or the business credit separation? I need every comment because I read every comment. Let me know where you are. All right, and if you want to go deeper, if you want to build the full system, not just the tactics, well, I certainly have put a link in the description to get a coaching call, a funding call, or help with credit. And let's get you straight. Credit, business, life. All 3 working together. That's where the real movement starts. Be blessed. Have an absolutely wonderful day. I'll talk to you soon.